What's up YouTube? It's Ron from Ronald Law, and in this video I'm going to talk about some of the challenges that we faced with industrial outdoor storage, and in particular one managed truck parking site. It's been a full 2 years since we closed on this, 24 months, and I've learned a lot. So in this video I'm going to break down the challenges with the tenants, the financing, some of the structural issues, and future plans, and what I would do differently if I had to do it over again. Ron from Rohde Law. I'm an attorney here in Dallas, and I have a commercial real estate law practice in addition to direct investment in industrial outdoor storage sites throughout DFW. We currently have 7 properties in our portfolio with partners equity, and we really are hands-on attorneys. So with that out of the way, let's talk a little bit about what I was thinking and the mindset, because I think it's really important that even when you're starting off, everybody has a lot of projections, we have pro formas, but what does it actually look like when the rubber meets the road? Everybody has a plan until they get punched in the mouth, and that's exactly what this video is going to cover. So if you haven't watched my other video, the quick overview is we bought a 5.5 acre site in Haltom City about, well, over 2 years ago. It was currently being used for truck parking. It's a graveled, somewhat improved site. It has a 6,200 square foot building, former truck terminal, really a great building, tilt wall, concrete, great condition roof. It's got 14-foot overhead doors. And so we really came in with high expectations that we would be able to manage the truck parking directly as a covered land plate while we prepared the site for a triple net tenant. And that was always the goal, was to just have this covered land play for 6 months, 12 months, maybe even 18 months, as we used our retained earnings to improve the site, as well as marketing it for lease and getting feedback from the market. So that was the plan when we bought it. I had rental projections. We did raise the rent. Unfortunately, our expenses actually went up a lot too. And so our net income was about the same, but it was not the numbers that I was projecting, if that makes sense. So let's talk about site improvements. When we first got the yard, it was a little bit rough. There were several areas of deep potholes. The gravel wasn't always consistent. There was no lighting other than, I think, 3 or 5 guard lights. And when I say guard lights, they're a little bit quirky because they are owned by the property owner, but they are maintained by the city. Super confusing because they're on our property and they're not even really close to the road. But it's a little bit weird. We pay like a flat fee for electricity, but they're responsible for maintenance and light bulb replacement. So it's a really difficult situation. And anyway, we installed more lighting. We put in an automatic gate that cost about $30,000. It's a very large cantilever gate with automatic remote access. And we finished fencing, so the site was not completely fenced off, and now it is fully 100% fenced in. So we just added some R-panel and some chain link improvements on the backside. So in terms of site improvements, that's what we've done for the truck parking. On the building side itself, there was some trash, there were some leftover containers, like large 250-gallon. We had to do asbestos testing on the old office portion. We completely demoed out all the existing office. So there were some costs that we incurred just to get the site up and to get it visually appealing, because when we first bought it, it was rough. It didn't look like a gem yet, and so this is what we've done. So I think in those 2 years, we have gotten retained earnings. We have done one distribution to the investors, but we have put that money back into the building, and the site is great. I have some pictures. We just did gravel again. I think you do need a budget about $5,000 to $10,000 a year just to refresh gravel. So financially, I think one thing that is really interesting, at the end of the first year, I benchmarked myself against my pro forma. When we first got this lot, the guys were paying $100 a month, and I had pro forma projected out a 50% increase to push the rents to $150 per stall, per 75-foot by 12-foot stall. And the rents actually exceeded that to closer to $215 or even $225 in some cases. However, our expenses have also increased Insurance was a big one. You know, we had a pro forma number that was confirmed, but with our insurance hike, again, the insurance went up several $1,000s that we didn't really plan for, but we can accommodate. And so the result is, even though our revenue was higher, our net income stayed about the same based on our projections. So we've been able to use that money, put it back into the property, as well as start distributions. We have a 5-year fixed term note, and so we're fine on the debt side, and we're really just trying to plan our next move accordingly. Challenges. Let's talk about the challenges. I think the number one challenge that we faced is dealing with the city. Haltom City has been a learning process, and I don't want to, if they're watching this video, you guys aren't difficult to deal with. It's just that they have a very different viewpoint about what is the law and what can be done versus what we interpret and what we think can be done. And so I think zoning, city requirements, setback, fire lane, sprinklers, sewer, lots of utility horizontal questions are huge. And I don't know that I would have been able to mitigate it pre-closing, because a lot of this is theoretical and it takes time to really flush out the answers to these questions. But I would say dealing with the city should be that number one issue before you close on a site, or even before you go under contract. You need to make sure that the zoning and the jurisdiction is going to be friendly, or at least tolerating what you propose to do. That's the number one challenge. Market challenges, again, we also got hit with the interest rates, although I think that what we are doing in iOS, the demand is still so strong. So rates may have taken a little bit of a hit, but there's still plenty of traffic. And when we were showing this property for lease, I want to say we have over 50 tours, over 75 tours of this space, all of different groups, just because there's so much interest. And so it's a little bit of a function of the rate. The economy softened a little bit, but there was a lot of interest, and there were groups, there were national groups, there were credit groups, people that were looking for this space and open to signing a lease if we could have gotten the green light from the city, so to speak. And so those are the two major challenges. And I think it's okay, because what I have done to mitigate the interest rate environment is with 5-year fixed debt. If I had variable debt and I had a thin NOI to start and my debt service suddenly jumped up, I would be in pain. I would be forced to get a decision to either raise rents, to get a new tenant in there, or do something instead of negative cash flow. And this is, I think, something I haven't really appreciated as much, which is fixed debt. Huge. I could not have predicted, and I think most people didn't predict rates going up as high as they did, as fast as they did. And so that fixed debt is really what saved our bacon. The lender is a very powerful ally, but they can also wield a heavy sword against you. And so we're not in a negative cash flow position, even with those interest rate increases. I think we're fixed at like 5.5, something like that. So that's great. Future plans. So the future is still bright. I think iOS has a huge runway in front of it. I just came back from an iOS conference in Long Beach, and I talked to all the top players. I mean, of the top 10 equity groups, the Tritons, the Zenith, Altera, Realterm, everybody is saying the same thing. Institutional partners are eager for this product. We understand the demand for it. The location is critical and irreplaceable. But I still think there is going to be a need for this site even as things develop. I think rents could just keep increasing as any other type of asset, but it's low maintenance, it's low coverage. But people in Europe, for example, have fully paved, fully fenced yards, and that's where they store gravel. And if you need gravel, if you need building materials close to the city, iOS sites are a thing. I mean, they get classified as industrial, but the use is still the same, and there still remains a use that doesn't need to be fully enclosed in a building, but could be stored outside. And so that's really what I see for the future. And so we want to continue to improve this site, manage it well, and really position ourselves for the best exit, assuming that the demand for this is going to continue to grow. However, we need to really dig into the regulatory work and work with the city on getting a compatible use for the future. So I've learned a lot, you know, and I feel like everything is new, and no man steps into the same river twice. But as long as you're focused and, you know, I think making good assumptions and being conservative, you're going to be okay in iOS. And so my key takeaways are anybody can do this. We bought this for a relatively low purchase price, you know, about $2.5 million, and so with debt as well. And so anybody can do this. It's a low barrier to entry, but the trajectory for this could be sky high. So thanks for watching. I hope you appreciated my takeaways on my first iOS site, and we'll see you next time.